Next year, economists are suggesting 5% GDP. So we've got 2 strong years of economic growth, higher than average in Australia than what we've ever seen. So it's really, an interesting time for small business owners.
Welcome to the Business Behind Your Business, conversations to help your business grow and thrive. Hi, I'm Paul Sweeney, founder of Pretium Solutions, chartered accountants and certified business advisors, hosting the Business Behind Your Business. Welcome to the Business Behind Your Business podcast. I'm your host, Paul Sweeney, and today joining me on the other end of the microphone is Jim Mills from Merit Planning. And Jim should not be a stranger to any of our listeners. We've had him on the podcast before, but it's great to have him back today. So welcome back, Jim. What are we going to be talking about today?
Well, mate, there has been so much happening in the market and the economy. There's so many different changes that small business people need to be aware of and just in change in general in how we're running our businesses now in our own workplaces. So there's a bigger picture at play that impacts us all and there's some good sort of information we can chat through there to keep everyone on top of the level.
So look, you mentioned the wider economy and so what's going on internationally has an effect. And I think really in the past, a lot of business owners have sort of buried their heads a bit and said, well, I don't need to be concerned about what's going overseas. The big economy doesn't really affect me. But COVID, particularly over the last 2 years, has really brought home how impacted Australian small, medium-sized businesses particularly are by events that are happening overseas. And supply chain's probably been the one that's grabbed a lot of attention with lack of supply for key inputs.
Absolutely. I mean, there's a need to sort of do a little bit of a history lesson here and there to understand where we are. And in terms of supply chain, at the turn of the century, we were all looking to outsource our manufacturing to the lowest common, cheapest denominator, right, which was China back then. So at the turn of the century, the US and Australia pretty much handed the reins over to China for manufacturing of goods, which then, from that point forward, really put us into a services sector of employment. About 85% of Australians' employment is actually in the services sector. So, whilst we're sort of sitting and at home in lockdown and accessing our computers and all these online sales, we've gone through the roof in terms of demand of these manufactured goods, which generally need to be imported, from overseas. And there's still a massive hub of imports that come from China in that respect. So basically, with the opening up of the economy and the exceptional demand that we have as a result of the spend nature of being repressed under lockdown has really impacted the supply chain, So what we think we see there is an eventual sort of move from services for a demand for services in terms of sales. And because we'll have an overabundance of that in the US and Australia, it'll eventually drive down the price of services. And in effect, that sort of puts a lid on inflation. So there's been a lot of press out there suggesting we're going to see hyperinflation and all these doom and gloom style of things. But in reality, the very impact of this supply chain and when it starts to unravel and changes the demand from manufactured goods to services, it's just going to keep everything in check. So, there's a wider picture at play there as well.
Yeah, and you mentioned manufacturing. And I guess going back to the last federal budget in Australia where manufacturing or light to medium manufacturing was flagged as an area that needed support and investment. What are we seeing in terms of new developments in that light to medium manufacturing in Australia? Are we actually making any progress there, or is it still too early to say?
I think it's probably still too early to say. I mean, we are still going to be predominantly a services industry, employment sector for this country. That's not going to change. Our biggest sort of exports, of course, are in the mining area, in building supplies. Wheat is also a massive export of ours indeed as well. So, I mean, when we look at sort of lockdown over the last period and what impact it had on the economy, even with these massive shutdowns in Sydney and Melbourne, the two sort of retail and economic hubs of the country, we still didn't see recession. So, and the only reason we didn't see recession was because we were having this commodities boom. So commodities is what's been sort of driving us over the last 12 months It's been a huge component of the recovery after that COVID dip we experienced back in February last year. So from the February the 24th to March the 24th, we saw the ASX 200 as an average, it dropped about 35%. But by June, we were already pretty close to being recovered. And then by December, we were definitely well and truly there. And then we started hitting new highs. And then this year, of course, we had these extended lockdowns. So in order to understand why we're in a commodities boom, there's a little bit of a need for another history lesson. Okay. So what we want to sort of understand is that the COVID sort of phenomenon that we experienced in the market was more like a natural disaster than it was an economic disaster. And when you see economic impacts on natural disasters, you see a real sharp dip and then a real quick recovery, which is what we saw last March to sort of June. We saw that really significant recovery. So what we then need to understand is how do markets react to government stimulus in those types of economic downturn periods, And we've got the perfect playlist to run by, and that's the GFC. So back 2008, 2009, we saw the GFC take place, and we knew exactly what kind of stimulus measures the governments would make to sort of recover that economic dip. So if you think of the GFC as kind of like a pothole and you think of government stimulus as the tar needed to fill that hole, if you compare the GFC to COVID, the COVID impact is like the Grand Canyon economically compared to what the GFC was. And even though it took a lot longer for us to fully recover in markets from the GFC, we are still able to look at the government stimulus programs and understand what that does to markets. And that's where we are at the moment. So, what we saw back in the GFC, we saw a lot of public housing, we saw infrastructure spending, but we also saw a great deal of quantitative easing, okay? And this is a huge tool that a government will pull out to fill that economic pothole, okay? What it basically is they're releasing government bonds into the market. Government bonds are really boring. In fact, they're less than 1% sort of a basic return, so no one's really interested in buying them. So what they'll do then is print the dollars to buy the bonds. And as they print more dollars, they devalue the currency. So that's what we saw during the GFC. So we saw the Australian start to rise against a declining US dollar because the US is predominantly involved in a tremendous amount of stimulus programs involving quantitative easing. Okay, so as the American dollar goes down, the Aussie dollar comes up, and we're known to have a commodity dollar. So as our dollar rises, we experience a commodities boom. And all of these sort of commodities are priced in US dollars, so they become cheaper as their dollar goes down. And then we get this massive demand for exports in that space. And that's what we saw during the GFC was a predominant part of the recovery of the market. And lo and behold, the COVID stimulus package was even bigger. I mean, we're talking in the US, trillions of dollars of spending in the Biden spending plan that's about to roll out as well. We've already seen a commodities boom from last year and now with further US spending coming along, we expect to see exactly the same thing. So that means a continued commodities boom. So we're now in the space where we're thinking we're going to start seeing a lot of booming in the energy sector. So companies like Santos, Woodside Petroleum, that type of thing, as well as minerals and those types of commodities will continue to be really, really strong for the next 12 months. Now, all of this spending government stimulus as it occurs, it will have the impact of pushing up the Australian dollar and dropping the US dollar. However, the Australian government has also been involved in quantitative easing over the last few months, and that's put a little bit of a lid on our rising dollar, and that's been very deliberate. So as of today, we're at 73 cents, but if you were to take the effects of the Australian quantitative easing off that dollar pressure, we'd be around about 90 cents right now, So whilst Australian quantitative easing can sort of put a dampening effect on the rise of the Aussie dollar, it can't stop it, it can only delay it. So we're sort of waiting to see what happens with the Aussie dollar over the next 12 months against US and what that means to our continuing commodities boom, So we've got a really, really, really strong and positive economic outlook as to what's happening right now.
And so how does that play out for the general business owner looking at, they might have supply coming from overseas, obviously exchange rates have a bearing on the cost of materials or the cost of product that they're importing. What's the outlook for these types of businesses that rely on those overseas inputs?
I think what's really important is so a lot of these imports required for those styles of businesses, they should be thinking about and doing a lot stronger planning and preemptive planning against potential supply issues. That's certainly one. But it's good news in the wake of US price sort of goods that you're importing, because the US dollar will continue to sort of go down as they spend those trillions of dollars. I mean, don't forget back in 2011, we got to $1.10. And our standard sort of resting place was around, and that was based on the GFC spending, nothing compared to this COVID spending. So that our sort of standard resting place is at 65 cents, 70 cents mark. There's like a 30-40% ride there, just as, the currency returns back to normal, which will occur the minute they stop producing the last bond to buy. So the minute they print that last dollar to buy that last government bond, that'll be the end of the commodities boom, And we have a pretty clear picture of what that looks like, because it's all public knowledge as to how they're rolling out these programs. So we do have a good 12 to sort of 18 months of sort of period here where we can sort of make hay while the sun shines. Potentially after that point, the market sort of the US dollar recovers, right? So American stocks, if you owned them in American dollars, you wouldn't really even need those companies to perform. You're just going on a market currency correction, which if the GFC recovery from the dollar is anything to go by, is like a 30-40% ride. So pretty fascinating stuff. I mean, if we have a look at sort of our gross domestic product in Australia and look at and a good correlation that is used by a lot of economists to work out how strong our economy is or how it's going to be performing in terms of GDPs, to look at the employment numbers. So we have those numbers from the last quarter. I should say the June quarter of this year, we had a $500 billion output from Australia. So that's even after all of the pain and suffering that we've been experiencing throughout COVID, we still had an all-time record quarter in the June quarter. So if $500 billion is now our standard, that means we're in a $2 trillion economy in Australia. That is a huge, it really, when people sort of think that we may be a small economy, we simply aren't. We're a real strong player, and it's not to be sort of sneezed at, that kind of level. So if you look at employment, the numbers in July, August, September quarter, this is indicative of what we can start to expect for the rest of the year. So the number of employed people in July was 13.16 million. And in August, that dropped down to 13.02 million. And then in September, it dropped again to 12.88 million. So we had a massive drop in employment over that period of time. Just between July and August, we lost 40,000 jobs. That's what that indicates. Hours worked is a different kind of thing to think about. It's interesting because in July, that total hours worked was 1.78 billion hours. It drops in August to 1.71, but then it dips up in September. So this is when we're starting to see a lot more people working from home and what that sort of meant in terms of actual productivity. So in September, it bounced up from 1.71 to 1.729, even though the total employed numbers was down. So the GDP for that quarter was negative 0.8. And from activity we've seen with job ads and activity from October and November so far, we're thinking that this quarter will look like a 1.22% positive GDP outlook. So, all in all, a strong Australian average growth is around about 2.7, 2.8. But this calendar year, it's looking like we're going to have about 3.5% growth, even with all of the COVID impacts. So our economy looks very, very strong. Next year, economists are suggesting 5% GDP. So we've got 2 strong years of economic growth, higher than average in Australia than what we've ever seen. So it's really, an interesting time for small business owners. I mean, if you look at our economy right now, we're seeing a property boom. We're seeing the commodity boom. We're seeing a lot of pent-up demand for spending, so that people want to spend their money. It was almost as soon as we could get out of the first lockdown, people just went nuts with spending. And again, this is what's happening now. That pent-up demand is driving up those sales figures for a lot of these people. So, if we think about it in biblical terms, what COVID has taken away in 2019 and 2020 and 21, it will certainly give back in 22. We're looking at a tremendous year, lowest interest rates of all time and the highest amount of government spending. So for small business owners, I mean, really, now that we're on the other side of this, it should be a really strong period for a lot of companies that were able to survive, the downturn. And there are a lot of people out there who went through a hell of a lot of pain for certainly different sectors. So hospitality, accommodation, retail sales all really suffered, but a lot of that pain and suffering, as long as they manage their supply chain, effectively to be able to put their goods in the right sort of line for sales, we should be seeing a really, really strong, even stronger recovery, moving into the end of this year and into 2022.
Yeah, there's two aspects there that I want to ask you a bit more about. We've talked about these, and I know that we actually had this conversation with Paul Cripps and Harry Nathu about one of these matters. But I just wanted to say get your opinion firstly on this coming out on the survival, riding the wave of this economic growth. It is a good thing for businesses that have really strengthened their position and strengthened the way they operate during COVID. But I see some alarm bells here, and I go back to the alarm bells for the businesses that didn't make it through the GFC and haven't made it through COVID, is running a business where everything is just coming to you. Like people are spending, there's a lot of activity, but you've got a danger there that you're not designing a business that's going to get you through these tough periods. It's like the tree or the flower or the crops planted in really shallow soil. That's good for a time, but as soon as something comes along with any substance to blow against it, it's going to rip it out. So there is an alarm. My alarm starts ringing because I've seen this before, that the businesses that just ride the wave, yes, they'll make hay while the sun shines, but when the sun stops shining and the rain starts coming and the hail comes, they're the businesses I think I have concerns for, because I think they haven't worked on building a strong business. They've just really best taking the cream off what's available. So there's an alarm there. But the other one I want to ask you about, and I'm referred to this, is this great resignation race, which we're seeing. So you mentioned job numbers dropping, but hours working. We've got this whole idea of resignation where we're saying 41% of people are looking to resign from their employment. Now, one of the other statistics we're seeing, particularly coming out of the US and the UK, is that up to a quarter of those people resigning from jobs are going to start businesses.
Mate, it's a terrifying prospect, to be quite frank. I mean, the success rate of businesses, 1 in 4 people just sort of instigate. And it's wonderful to think that there'll be that much new business happening in Australia. And you would wish every small business owner out there every success, because all of the heartbreak and tears and the commitment required and the get up and go is inspirational and outstanding. But we know how hard it is, and the failure rate of businesses out there is very, very high. Of that, 41% of people that are thinking of sort of leaving their employ with this great resignation, which they think will happen in Australia in March 22 after Christmas bonuses. And if 1 in 4 of those people do jump into small business, there is going to be some catastrophic issues with those that don't quite get it right without the appropriate level of planning. And you just can't, and to think that they're starting up a business at a time when government shutdowns and rules and things like that have never been as strict and so debilitating for a small business. It's pretty frightening. Not only do you need cash flow, but you need existing cash flow. You need to make sure that you've even got your own team in place. And don't forget, 41% of them out there are thinking about moving. It's interesting. And then if you have to move into this kind of thought process of new ways of working and working from home, which is what a lot of the people are thinking. They've spent the last couple of years predominantly working from home. Previous to COVID, working from home was seen to be in different industries something around about 13 to 22% more productive than being in the workplace. But that was based on those people that could work from home and be productive. During COVID, everyone had to work from home. So what some of the studies that I've seen occurred was that productivity actually went down initially, and then it started to go up. So it went up, but as you can see in those September working hours, it went up because people had to work more hours to be as productive, right? So issues at home, homeschooling, distractions, the fridge, having to make your own meals rather than sort of going out for lunch. People were working longer hours for the same pay, and just to be as productive to meet their sort of employment expectations. So I think that's got more of a driver. I don't think people were necessarily not treated nicely by their employers. I just think they got burnt out by having to work harder and longer to be as productive because of all of those distractions. And at the same time, secretly, a lot of people saying, I love being at home. You know what? I'm going to make my own go of it. And I'm deciding I'm going to do my own thing. I know I can work from home now. All I need is a computer and a phone, and I can outsource this and outsource that and see how we go. Mate, I wish everyone out there who has a crack at it every success. But, you and I know, Paul, from working with small business people over the even just the last decade, small business is tough. People had better how to plan. And, one of the funny things about business when you first start off is you don't have any cash flow. At a time in history when that's the only thing that's going to save you if we go into another lockdown.
Cash flow is critical for any business, and that lead generation. It's very hard to start a business without cash flow. Very hard to start a business where you don't have customers, and you need the cash flow to generate the activity to drive customers to your business. So it is going to be a hard slog. I don't think it is necessarily going to be easier than working for somebody else. In fact, I'm pretty much guarantee that it won't be. There'll be exceptions, but we tend to look at those exceptions as the rule, and I don't think that is the case. We see a lot of these exceptions being promoted as, isn't it wonderful to run your own business? But I suspect that the success stories are less than 5%. Of the people that start businesses. And I think the latest statistic is that only 10% of businesses survive the first 10 years.
Yeah, wow. That's amazing, isn't it?
Yeah.
And that's tough. I mean, that's 10 years is a big chunk of someone's life, So you would urge people just to really do their homework. I mean, in my business, we work with financial planning. I've got small business owner clients. I've got people that have been employed their whole lives towards retirement. And I can tell you, the small business person might have more freedom and might have a sense of perhaps being more fulfilled. I mean, it's part of the reason why we've gone into it, I know, as well as all of the other necessary reasons. But you can see someone who might be a lifer employee, and at the end of the day, they've got a really healthy superannuation fund, and they've never had to sort of sacrifice on the cash flow in that regard, and they retire pretty healthily. And I've seen a lot of small business people who live their life on the wire and get to the end and they really don't have a lot to show for it, especially if the business isn't saleable. So it's a whole new world out there, and there's a lot of considerations that need to be taken into play. But you've got to have a sound business plan, and you've really got to know that you've got a high degree certainty of success. Otherwise, you could be losing that 10 years of your life, which you could have been doing other things for. And it's small business takes its toll, as a lot of the restaurant owners and the service industry and the hospitality industry has experienced over the last 2 years of what has been a very, very painful period for that particular sector.
Yeah, there's a lot more to it, and I think, look, not to discourage people from starting a business. I think what we want to encourage people to do is actually undertake that planning exercise. Planning, identify what you're going to be selling, who you're going to be selling to, and what the market is. So I've seen too many businesses start without a viable product or a viable market, and that just leads to disaster. But there are a lot of positives there. So if good, strong businesses can be established in this growing environment, then that's a good thing. So which industries are being flagged as, I guess, the boom industries? Is there going to be a retail recovery?
It's an interesting question. I was looking at a survey done by the Australian Bureau of Statistics, and it answers that question pretty clearly as to who are the strongest sectors out there at the moment. So one of the questions in it is how much confidence do they have of being able to meet financial commitments over the next 3 months? And the top kind of performers there are financial and insurance services. So obviously, that's including the banks and whatnot. One up the top there is rental kind of companies, hiring and real estate services. They're up there apparently, is feeling quite good with cash flow at the moment. Electricity, gas, water, mining, transport, postal and warehousing. So there's the sectors that everyone's saying are looking really, or the Australian Bureau of Statistics views as being strong. And the guys that are really suffering right now are retail trade. They're worried about the next 3 months as to whether they'll be able to meet their financial commitments. Accommodation and food services, because they've just lost a huge proponent of their cash flow. Wholesale trade is up there, and arts and recreation services. So that's interesting. But I mean, think about the last two skis. I love skiing with my family. We haven't seen the last two seasons in Australia because we simply can't. We were in lockdown. We couldn't get there. Think about those ski fields and those particular industries, and all of the sub-associated industries of the B&Bs and the restaurants and the cafes, and it just drills down as a major kind of impact. They have lost so much revenue this year. They really are worried about what's going to happen next. I know that the ATO has been pretty friendly to a lot of businesses. So from a lot of my clients that have spoken to the ATO and asking for some concessions and some help, a lot of them have come back to me and said the ATO is just happy for us to get through Christmas, and they'll talk to us about it. There's still a bit of a human element out there, which is great to hear, and the ATO is generally pretty good to deal with in that respect if you keep your promises to them. So there's light at the end of the tunnel. We just got to get through this. But as I said, we're all pent up and we're ready to spend. So a lot of the downflow that these guys have seen, they should be seeing back in renewed sales as long as they can get this supply chain thing sorted out.
Yeah, supply chain's going to be critical because I know some of our clients particularly have had delays of 3 to 6 months for product. And obviously, if you don't have the product, you can't sell it. So that's going to affect your ability to recover as a retailer or a wholesaler. So, keep an eye on what's going on. I think we are now in a more global economy, and our dependence on what's going on globally has become very clear in this last 2 years. So we can't ignore it.
And mate, the amount of imports from China and manufacturing over there, it really is significant. So, as you said, that recognition of understanding that we need to start doing more manufacturing in this country, it's very true. And especially if there were any kind of global issues with China, and knock on wood and pray that there's not any sort of open hostile activity that occurs, because they can really put a damper on our economy fairly quickly.
Yeah, absolutely. Well, we could talk for hours again about the impact of China on our economy, but I think, look, if there was one key thing that business owners should be doing right now in response to the conditions that we've experienced and also the outlook, what would that one key thing be?
Mate, I think the one key thing really is preparation for supply chain, especially if you've got a goods-based sales business. Like you really need to make sure that that's going to be on the line there. There's been reports that the Black Friday sales in the end of November.
Yeah.
I mean, they have to rethink that because they might not have stock on the shelves for the Christmas sales. So it's almost too late if they haven't started thinking about this. They need to get their goods on the shelves. I think another important thing though, mate, is what's the world look like moving forward? Because this resignation phenomena that we're seeing overseas and threatening to sort of raise its head in Australia. Why is that? It's because there are some people that like working from home and there are some people that don't. And maybe there's a mixture of people that need a hybrid outcome. And they're basically now being drawn to wherever they can get what they want or what they see as their ideal kind of working situation. Younger people thrive in social, whereas the older people, we're sort of sick of everybody anyway, and we're happy to work from home and talk on a Zoom or something. So there's a completely different way of building your team and your workforce, and you've got to put some real thought into that as well as to what's going to be the most effective solution for you, so that you don't end up, without critical employees in your business.
Mm-hmm. Yeah, there's a whole host of those sorts of issues, and I think, look, if you're interested in hearing more about that, we've got the recording or the interviews with Paul Cripps and Harry Nathu, where we've gone into these. Well, I guess this topic of the Great Resignation race, and also looking at what the future of work looks like and what sort of skills you're going to, as an employer and as an employee, but particularly as an employer, to equip your employees for the best outcomes. So it's there's a lot going on.
There is, mate. There is. The world continues to change, but I think it's important to sort of see that there is a lot of good light at the end of the tunnel in the short term. There's really strong economic factors that should lead to really good growth in small business. across this country over the next couple of years, and I guess the message is make hay while the sun shines, because there will be, further kind of strain down the line. We kind of think 2023 is back to an average GDP growth year. And thereafter, once the American dollar's recovered after this, the ending of the quantitative easing over there, there could very well be another significant market correction. So it's important to be active and keep your eye on the ball. But there's good times coming, but you've always got to prepare and sort of future-proof your business as much as possible.
Yeah, Jim, we're about to wrap up the interview, but I think you just raised another great idea for our next conversation, because you mentioned about 2023, 2024 and the forecasting there. And there's a whole lot to consider for a business owner in terms of planning for capital spending, investment, moving forward. So we need to be aware of that. So we might get you back to look into that forecasting or economic forecasting and business impacts in more detail.
Very good.
Great. So, Jim, if our listeners want to get in contact with you, what's the best?
Probably go to my website. You'll have all the contact information there at www.meritfp.com.au.
Great, fantastic. And we'll put links to Jim's contact details in the show notes, and also some of the resources that Jim's referred to in today's conversation. So, Jim, thank you again. It's great, as always, to speak with you. I'm looking forward to getting you back to look at this topic in more detail. There's a lot more to it.
Pleasure. Thanks very much.
Thanks for listening. Do you have a question you'd like our team of experts to answer? If you do, send your question to podcast@thebusinessbehindyourbusiness.com. To hear more from The Business Behind Your Business, don't forget to subscribe using your favourite podcast player. Or you can visit the businessbehindyourbusiness.com website.